In this video, traders, let's look at the best times to day trade. Stay tuned. Hey guys, warm welcome to you. Thanks so much for joining me. All right, so best times to day trade. Let's think about this more strategically rather than the obvious answer as well, where the volatility is, because that's correct if you thrive on volatility, but not every trader thrives on volatility. Not every trader wants to trade volatility. Great example, talking to Gregor, who is now a profitable trader. He's had his first green year on the DAX, and this year's been going great so far. But one thing that stood out for me when going chatting to him was he doesn't trade the open. He doesn't like the volatility of the open. And whereas you see traders flock into the open, trading the open, driving this, that, and the other, and fine, but it's finding what suits you. And so the answer to this question is going to be, hey, let's take a step back and think about the type of trader you are. Do you like trading volatility expansion, trending environments, breakout environments, explosive moves, momentum ignition type trades? Or do you prefer to trade kind of mean reversion trades where you get the stall and it rolls back to a VWAP? You know, what is it? What's the type of trader you are? Do you like those quiet markets? You feel like you can read the tape better on those? Do you feel like levels a little bit cleaner? Do you feel like it's easier to spot exhaustion? What is it? So it's again, it's taking a step back, not going, well, everyone says the best time to trade is this, so I should trade this. It's no. What's effective for you and your strategy? If you're better in a calmer, quiet market, then maybe going against the crowd and doing what the crowd is not doing is going to be your edge, just like Gregor. And so think about that before we kind of dig into this. Saying that, let's look at when the most volatile times are. It's an easy question to answer if you're trading equity index futures, like if you're trading DAX or Dow or FTSE or NASDAQ or S&P or any of those, because the spiciest time is going to be when that underlying stock exchange opens. So I'm going to talk UK time for you, convert it to your own. 8 a.m. DAX, 8 a.m. FTSE, 2:30 p.m. US, and then we get the little kind of overlap where between 2:30 p.m. and 4:30 p.m. is the US open. 2 hours of the US has been open, and we close the European markets at 4:30 p.m. UK time. So you get that little kind of overlap where there's kind of enhanced volatility, and then the US closes at 9 p.m. UK time. So all throughout that, the opening periods, especially the overlap, is when you're going to have spice and volatility. And of course, if you're trading Hang Seng or Nikkei and stuff, you can look at the opening hours for that in your time zone. But the key there is, that's just an obvious answer, right? When the bell goes, everyone starts to do orders, and there's option order flow, and there's this and that and the other, there's going to be volatility. Now, if we flip to the Forex market very briefly, you guys probably know this, the kind of flow, the order flow, the volume, should I say, or volatility goes with the sun, right? So you kind of have this London, there's no a definite open as such, because we don't have a bell going off with Forex. There's no centralized exchange. At 7 a.m. is about the time dealers are going to be at their desk and ready to deal. So dealers are going to be there before that, notoriously early start in the city, but that's when orders are going to start to be happening, right? Because they know that the actual stock exchange open at 8 a.m, money's going to be flowing. And so that's when you're going to get some spice. Now, you look and you see, hey, when do the Americans start to get to their desk? Those guys are going to start to get to their desk about, I'd say maybe, again, there's no bell going off in the Forex market, but from midday, 1 p.m, something like that, knowing that at 2:30 p.m. there's going to be cash flowing. And don't forget, 2:30 p.m. is 9:30 a.m. Eastern, which is much a little bit later relative terms compared to the European counterparts, which are 8 a.m. And so they're going to be at desk a little bit earlier. And so that period where both big economies, European economy, UK economy, US economy, all those dealers are at their desk, that's when you're going to get the most volatility. And so if you, going back to that initial point, if you thrive on volatility, if that's your bag, if you like to trade those type of conditions, then this little crossover period here is going to be the best for you when the US guys are at the desk, the London guys are at the desk before the London guys crew go home, which is going to be around 4 o'clock, 5 o'clock, that sort of time. Maybe a bit later, but again, we're kind of playing with a little fuzzy zone either end here, but that in the thick of it, that's when you're going to get good movement. That's when there's going to be dollars shifted around. That's when there's going to be pounds shifted around. That's when other currencies are going to be exchanged by some of the biggest economies in the world. And so the volatility is going to happen then. Now, when the US guys and girls go off and finish their day and go and have a couple of beers or martinis or whatever they have, and dealers are going to bed, then obviously Tokyo, Asia, Sydney a little bit later on starts to pick up the slack. But that's when things are a little bit quieter, okay? Things are going to calm down. So if you're trading Forex, look at the overnight session and say, hey, if I want a quieter condition and I like trading a little bit calmer mean reversion, or maybe just waiting for a trend to initiate, then that might be a better time, it might suit you better. You know, maybe trading overnight futures, okay? When the Americans, you know, no longer at the desk, European and British aren't up yet, and it's quiet as such, then sometimes are these little trends that happen overnight that stall and then rotate back. You know, but that's not going to suit you if you like this extended volatility, breakout, tape reading type stuff. And so, you know, understanding the market you're trading, understanding who's trading the market, understanding what drives your market, understanding the biggest economies that drive the market, what the decision makers are, what the engine of the market is, how the crossover works, when the open occurs, how the commodity market affects your market, all these kind of other things. For example, you trade gold, you need to be looking at the dollar, etc. So this then is the puzzle that you look at, and just to get to stage one, right, and go, right, actually, you know, I really thrive in this environment. That's going to be this point in time, this point in time, this point in time as a day trader. That's going to be my best opportunities. And experiment with it, but don't be afraid to try something different. Don't be afraid to say, you know what, actually, overnight we're getting some good moves. The things have changed a bit. Everyone's avoiding the overnight session because they're all trying to get not panic, but they're all trying to jump on the open and make money at the open. However, I think, you know, strategically looking at the overnight session, we get some good moves that I can position here and here, and really start to think about why that would work based on who's at the desk and who's not at the desk. Because if you're thinking like that, then you're thinking, hey, how can you as a retail trader get edge over everybody else? Because that's the thing we can do. Now, these guys, of course there's going to be deals going, of course there's going to be volume, of course the exchanges are open, a lot of them are open overnight, all the equities aren't, but the futures are, Forex obviously is trading, and so there is going to be stuff going on, but you know, most people are going to be scheduled to work for these times. Unless there's crisis going, there's not going to be deals done. The phones aren't going to be ringing. The volume is going to be less, just by the nature of a dealing desk. And if that's an advantage to you, and if you perceive, hey, actually, sometimes we get really, really stretched on very low volume overnight in this, we tag like really key significant level, which I know are going to interest people if they were at the desk. It's going to be firing off maybe orders, resting orders. I know it's going to be a brick wall there because it's a solid day from level from yesterday. I don't think the overnight volume, even if it drips through it, is not going to be pushed straight back under it as soon as we open. When you start thinking like that, then you can start to maybe say, hey, that's my best opportunity. The best opportunity for me is when a level is breached overnight, very quietly, very slowly, almost under the radar, and I know that 7 a.m. when the UK and European boys get in and start trading this, boys and girls get in and start trading this, then we're going to push straight back under that level, for example. So that might then be your edge. And so the answer to the question isn't necessarily, hey, when the most volatility is and why this and that and the other. It's, hey, where is your edge from a personal perspective of how you trade, and also from an experimental perspective of, hey, I've spotted something, I'm becoming an expert at this market, I understand how the nuances work, and I've spotted something that gives me a little bit more of an edge, and I believe that I could trade this and be profitable with it. And that's where you kind of find these little nuggets. That's where you go, hey, actually, I'm looking when no one else is looking. And that doesn't necessarily mean that there's going to be something there, but very often there is some sort of pattern worth exploring. All right, guys, take care. See you in the next one. Keep your risk managed. Goodbye.